Welcome back to the Discount Property Investor Podcast. Our mission is to share what we have learned from our experience and the experience of others to help you make more money investing like a pro. We want to teach you how to create wealth by investing in real estate the Discount Property Investor way. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. Thanks for tuning in.
All right, guys, welcome back to the Discount Property Investor Podcast. I'm lucky to have my business partner and co-host back today for an episode.
What's up, Dave? I've been absent for so long.
Hey,
just
buddy.
over there doing my thing.
No, you're doing your thing. You're staying busy.
Letting you run the show here, which is great.
You're running the show with the banks and the rehabs and all that, though, Mike.
A little bit.
We do appreciate you, brother, but we're happy to have you back,
Teamwork, man. Teamwork.
What are we talking about today, man? I have a suggestion.
All right, let's talk about it.
I'd like to talk about the advantage of building wealth with rental properties.
Dude, let's do it. That's a great thing to talk about because we are, and I mean, I'll be fully candid, we're a little slow.
We are a little slow right now.
Deals are a little tougher to find.
Thank the Lord that we have 60 single-family homes and another roughly 30 units of apartment complex to help pay the bills every month. That's about 20 grand
it's
coming
huge.
in.
Well, and what's amazing is with the, everybody talks about the market, and I don't like to talk about the market because it's so specific or so local in real estate, but it does seem to be a national thing. That the market is high or housing is scarce. So prices are going up. So that has truly helped us because we bought so many properties prior to now. So these assets, like Dave was talking about, is like having these assets, they've appreciated significantly in value. And if you look at any of your other accounts, they're not doing as well. So again, and I'm not a naysayer on crypto or stock investing.
Over the last couple of weeks, though, it's all down anywhere from 20 to 60%.
Yeah, well, again, and they got hammered. Crypto got hammered recently. But what was funny, I actually heard someone on the radio, and it was a conservative person talking, and they were actually like for investing in crypto because they were looking at the time period over 1 year. If you invested $10,000 in crypto and $10,000 in the stock market, you would be at $9,000 in the one and $9,200 in the other. Exactly. So you lost a couple $100. But if you went back 2 years, you'd be down a little bit and whatever. But if you invested in when they went all the way back to 5 years ago,
you're up like 2,000%.
You're up to about $30,000 in crypto, and you're at about like 11,000 or 12,000 in the stock market. So again, I'm not a naysayer. Don't get me wrong. It's just your time period. The longer your time period for most investments is always going to be helpful because again, you don't have to cash out when the chips are down. So again, that's important thing to consider.
Yeah,
investing.
when you cash out and the chips are down, you are in the house of pain, man. It hurts. It's no fun. But back to rentals and real estate. Mm-hmm. This is why I love building wealth with rental properties. So if you're listening to this podcast versus watching this on YouTube, I'm going to have to describe a little bit what I'm doing here. But I have a piggy bank in front of me. And it's a pink piggy bank. It's got white polka dots. It is quite hilarious.
Yeah, it's cute.
But it's a great, not acronym, that's not right, metaphor. Mm-hmm. That's the word I'm looking for what it's like to buy a piece of real estate as a rental. So when we buy a rental property, we essentially are buying or creating, I think it's a better word, a small little piggy bank like the one I'm holding here in my hand. And this piggy bank, when we buy a rental, we're hoping that it's got 20 grand worth of equity in it. That's kind of the goal at a minimum. Hopefully more, but it's got 20 grand worth of equity in it. Well, assuming that we use, a local bank and, we do like a 20-year loan, right? A 20-year amortization loan. Now that rate may adjust a little bit along the way, but over the 20-year period, this piggy bank will grow to the size of like a VW Bug. Mm-hmm. I mean, if you think about it, right? Going from 20 grand worth of equity to maybe 150 grand worth of equity if you pay that property off, this piggy bank will grow. And instead of just, having a little bit of change in it, Mike, it's going to be filled with $100 bills, and it's going to be the size of a VW Bug. Is it a beetle or a bug? What do you call it?
I don't know. Same thing. I call them beetles.
Same thing, right? But why is that important? Well, it's important because if you are the one depositing the money into the piggy bank every day, week, month, it may not grow. Or if it does, it's going to probably be kind of slow. But when you put it on autopilot and you let the tenants pay the mortgage for you, somebody else is depositing money. I can't fit this stack of cash in here right here, but somebody else is depositing this money into your piggy bank on your behalf. And it is one of the best ways that I know of to create wealth. I love it. I absolutely love it. So every single one of our rental properties.
What are these called when they're $10,000? What's that called?
A rack?
A rack? Is that a rack?
I think that's a rack.
So we've got 9 racks here.
Yep.
This is a really good example, Dave. This is what we're selling, one of our rental properties. We talked about being a little slower. This is what we're going to be cashing out.
90 G's.
From the sale of one property that we purchased, it's probably only about 4 or 5 years ago.
Mm-hmm. Oh, less. 3.5.
I'd
say 4 tops.
Right.
Yeah.
So again, we put some of our own equity into it. We put our
We forced
labor,
the appreciation.
exactly,
With a little rehab, but maybe only, maybe 30 grand total?
right.
And we're going to cash out probably closer to 100.
It is closer to 100,
So
but
30 comes back.
I wanted to use the stack we had.
Yeah, 30 comes back, and then let's say 70. So we'll take this 20 off the top, and this will be the profit that we're going to make on that deal. But it's because we bought it, we didn't hesitate, and we let the tenants pay it down for us for a couple years. And in this scenario, where we're gonna essentially get to make $70,000, that is due to the appreciation in the market right
And
now.
here's the best part of having a partner. You have to share it with them.
Hey, thanks, Mike.
And then the government gets their stack.
That's right.
Over there.
That's right.
So we
Each
chuck,
of us got to give
that's
that
right.
to the
We
government.
chuck a couple over there to the government, and we're left with this. But again, we still got a couple
We
racks.
still got that. Got a couple racks.
Couple
man.
racks, I guess, is what it's called.
That's exactly right.
Which is really fun.
So buying rentals, guys, is my favorite thing. I know it's Mike's as well. Don't wait to buy real estate. In fact, I made a video about this morning over on my YouTube. Buy real estate and wait.
Okay, well let's answer this question then,
Yeah,
because we
what
just
you
talked
got?
about how we're so lucky we bought it 3 years ago and we're selling now. Well, you're just saying, well, wait, buy real estate. Don't wait, buy real estate. So why is that, Dave?
Well,
There's a couple reasons.
yeah, there's
I'll
a couple
start.
reasons. Go ahead, please.
One, you can't go back in time. All
Yeah.
right, we can't predict what's going to happen in the future. We can hypothesize and we can come up with some relatively educated alerts about what is going to happen, but we don't know. Everyone who talks about a crash coming or no, there's no crash coming, it's different this time, and that's what everybody always says. But I feel like we might be. It is different this time. That's what's so weird.
Well, it's always
about our
different.
current
It's
market.
different every time because there's different reasons that put people, or the economy, a better word there, put the economy into a bear market, right?
So, and here's why I truly believe it is different. Even if we experience a crash in real estate, we're in a time of inflation and possibly going into a period of, I guess, stagflation, where, gosh, I can't even remember what stagflation is, but inflation. So everyone's familiar with that, and that means that the price of everything's going up, right? At 8-9%, like really high. It hasn't been that high for 40-50 years. So if the real estate corrects and it goes down, say it drops 20%, well, we're still going to see increases in all of our prices. All of our inputs are getting more expensive. So the cost of new homes has to go up. There's no way it can go down. That's just my.
Well,
Again,
I
it can
agree,
go
Mike.
down in nominal, but not in real dollars or
Yeah,
real value or whatever the
I
nominal.
agree. I mean, the best hedge against inflation is dirt. And some people will argue, oh, it could be gold, it could be silver. Well, I don't like those arguments because you can dig more gold and silver out of the ground, right? You can't create more ground. That is pretty fixed. Now, there's going to be that guy out there that says, oh, they're building islands over in Dubai, but those islands are costing $10 million to build and they're probably worth $2, right? So it's like that's not a profitable thing to do. The only reason that I would forecast the values of real estate really taking a big dive is if there is some sort of an event that takes a big piece of the population off the table. Now, one could say, oh, well, COVID was, somewhat of a plague. Well, not necessarily. The amount of people that have died off from COVID, and if you've lost somebody, I send my condolences. It's obviously terrible, right? But the amount of people that we've lost from COVID over the last 2 years is not any more than we would have lost from the flu.
Right, and so
or the cold or whatever, right?
You can see
So-
this with all-cause mortality. So the data in all-cause mortality, or the total number of extra deaths was not significant.
No, exactly.
Like it was not a
maybe it was a little higher than normal, but it wasn't significant, like you said.
Yeah, so there wasn't a significant change, so there's not a significant decrease in the
And you know what
population.
affects prices is the supply and demand in all types of economies, right? So if you have a growing demand, meaning people are living longer and they're mass producing and having babies, then the amount of people is going to increase. Well, unless we're building houses at that same rate, there's going to be a higher demand, which is going to bring the prices up.
Dave, here's the big reason, and I think that we're overlooking it, and why even when or if or when, no, it is going to be when, the market corrects, or if there is a big downturn. Why I'm still going to say I'm fine with telling people to have bought, because we're telling people to buy at a discount.
Oh, I love that.
And to create value or create appreciation by buying at a discount and improving the property. So if there is a correction, yeah, you might get some of that paper gain wiped away, but you are not
I gotta love my little soundboard.
going to lose money, especially if you've got a 30-year fixed mortgage.
Oh my God.
There's almost, you're
Yeah,
going to be
buying right now at a retail price is probably not the best thing to do. In fact, I wouldn't suggest that. But if you can buy it at a discount, then I praise that. I love that because, when we buy at a discount, we're typically looking for a 20% minimum discount, right? Ideally 30%, but at a minimum it's 20%. Well, that protects us against a 20% downturn in the market to still be able to break even on that deal. And if we buy it at an even bigger discount, we have a bigger, spread of mitigating risk. And if we do some rehab and we force appreciation on that, now we have an even bigger spread. So, ideally, I would say try to buy at a 20% discount at a minimum.
Yeah. So again, that's why we've slowed down a little bit, because it's a little more difficult to find those deals, but we still encourage people to buy right now, even if it is the height of the market. So that's all we've got, man. Piggy banks. Buying a house is like a piggy bank. 2 or 3 is going to make a huge change on your financial future. And 5, 7, 10 houses, if you were able to do that over the next 5 to 10 years, it's going to change your life. Again, one a year, people change your life.
It's going to change your life, absolutely. So guys, check it out. Check out discountpropertyinvestor.com to learn more about how to buy at a discount. That is our passion, is helping you learn how to buy properties at a discount. And with that, Mike, it's good to have you back, brother.
Yeah.
Signing off. That's right. Guys, thanks for listening. Signing off.
Thanks for listening to the Discount Property Investor Podcast. If you enjoyed this episode, please like, share, and subscribe to help us reach a wider audience. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. We would also appreciate it if you left us a review on iTunes or Stitcher. Thank you in advance for your support. And remember, you make your money when you buy, you get paid when you sell. Now let's go build some wealth.